Hello, hello.
G'day, how are you?
Recording in progress.
Thank you.
Sensational. Lovely to see everyone's smiling faces here today. Hey, this is great. You know what, Mike? We're getting more and more people every week turn on their video. This is awesome. I'm now starting to put faces to voices and everything. So good on you for finding confidence in doing that. It can be rather confrontational, but it's great for us to be able to see, you know, who you are and get engaged that way.
Yeah. I get most of
Mike,
my social activity here on these calls.
Yeah. Hey, Mike, you were talking about the straddles before and earnings mastery. Have you got to optimal breakout yet?
Today we do that.
Ah, right. Okay.
Yeah.
I won't spoil the fun. Paul, if you like what you've seen, wait till you see what's coming.
I'm excited about tonight. I hope I can stay.
Different system.
Yeah, go ahead, buddy.
No. I was going to say different system, but had Disney met the category or the criteria for an optimal breakout, it would have been even more profitable. It's smashed earnings after market. It's up around 118 at the moment as well. But Mike will take you guys through the content later on today. But again, another tool in your arsenal to go and trade the markets. Really cool system.
It is cool. Yeah, it really is. All right. Well, let's top of the hour. I do have 2 more classes, so I've got a hard stop around 4, which means I'll go till 4:15. But we got. I just can't stop talking about this stuff. I love it so much that I just have a hard time pulling away. All right. Well, let me get my slides shared here. Welcome everybody. Thanks for sharing your screen. If you did, it's always good to see beautiful people that are working on their lives and growing and sharing. It's just awesome. All right, let me get my screen going here. There we go. All right, so welcome to group coaching. This is Snipers. You know, Matt, I saw the trades that you were tracking, and a lot of Iron Condors, and that was really what I wanted to focus on today as well. So we're going to get into the portfolio here in a minute, but it's some really I'm really liking it a lot. I look at well, I'll come back to this in a minute. Let me get the disclaimer done so I can start actually talking about stuff. Stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of these risks and be willing to accept them in order to invest in the stock, crypto, and options market. Don't trade money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Okay, let's do a quick market update. And if you don't know this morning, the CPI came out flat. So this consumer price index, it's an inflationary metric that reveals how expensive stuff is for us. And it was expected to rise 0.2% and was actually 0. So it didn't inflation hasn't gotten worse. And in response, of course, the market took off to the upside. And we are now firmly, this is the SPX, we are firmly above, 10 points above 4,200. So, you know, Matt, you want to show your fib levels there? And
I will. I know. When I got up this morning, I thought, hang on, I've shared a post in the sniper thread last night going flat market. Let's go and see what happens. Wake up this morning and go, what's this gap? What happened? Can you turn sharing on for me, Mike, please?
Yeah, man. There you go.
Sensational. Has that come up?
We have it, yeah.
Oh, okay, cool. I just don't have the green box around my screen. So here is the S&P with my fabulous Fibonacci levels on it. And we can see here, I highlighted this yesterday actually in a sniper post, suggesting that all these points of resistance here, and when it's repeated historically on divergent volume, we generally get a sell-off. And you can see that in the data that precedes where these resistance points are. But as Mike said, massive catalyst in the market around the CPI data, and we've got this gap up. So we now have a close. Now, Mike, would you argue that this is a bullish hammer pattern here?
I would argue that, yeah. I would not object.
What that means is that we have a lot more buyers, and there was actually a news article today that had an imbalance of 1.4 billion to the buy side on the equities market today. So interestingly, volume's off on it. Now, this gets me to question the weight of this gap. The S&P doesn't like to have a gap and not fill it. So we have a solid close over the 50. It is a bullish hammer pattern, which suggests we may run up from here. But the one thing, Mike, that I don't like is this volume. I don't know where the institutions are on this.
That's not the accurate volume. It's not. I don't think it's posted yet. Hit the latest date. The volume doesn't get the actual volume during the day. Doesn't
Oh,
get,
yep. Got it.
You're at 427. I don't know if
the volume is up.
Well,
it's
look at
72 million.
That's not correct either. Take a look at Thinkorswim, or I could show it. But if you look at Thinkorswim,
yeah, I've got it here. Hang on, I'll just drag it on.
A little bit higher than it's been higher than the last 4 down days of volume.
Yeah, here it is here.
So it's not a volume spike, but it is an increased volume over the prior 4 days. So
which would then lead conviction to that gap.
Yeah, when you see that hammer pattern coupled with, especially if it's a big volume spike, you're going to see, you usually see a reversal. You could go back to a prior pattern and see it. So let me grab it, and because I'll give it right back to you.
I think this gap will fill. It's just a matter of when.
Yeah. Here's what we're talking about. So here's a hammer pattern, and this is the market is in free fall for essentially. Then we get this hammer pattern, and the volume down below is above average. When you see that pattern coupled with above average volume, then that often precedes a bullish run. And what we're talking about is there's a hammer pattern. Now the volume is slightly below average, but had it been above average, I would say there's a greater degree of probability that the stock, the SPX or the size in this case, would continue moving up. So that's what we're looking at.
Mike?
Yeah.
When you look at it's about the 28th of March, there's a hammer pattern there at 460 before the downturn.
Let's see. Right here.
Yeah.
There's no volume though. You see here, the volume isn't there, and none of these patterns don't work all the time. Of course, nothing does. Here's another one here. Hammer pattern, volume, boom. I'd say it works. I'd say at least 75% of the time it works. Here's another one. Look at that volume there. When you see that pattern, hammer, long tail. Oh, this, it's not the actual head of the hammer is a little big, but that's okay. The volume was immense. You could literally take that pattern. Here's another one, above average volume, and then there's follow through. You could literally take that pattern and buy calls. Here's another. I mean, here's a doji pattern. Volumes above average. It's not a hammer pattern, so that's not ideal. But you see a doji pattern or a hammer pattern at the end of a trend. You don't know it's the end yet, but that will commonly see that pattern match referring to at turning points. So here we're looking at this one, and it's at the resistance is at 420, and the volume was at.
How good's that closing price? 419.99.
Yeah, there's no mistake why that's happening. But the volume today is higher than the prior 4 days, but still less than average. So it's not a super powerful confirmation, but it is somewhat a confirmation, a little bit fuzzy, but 420 could hold, and if not, Matt, I think the next fib level or 420, 430 is next. 430 is right here.
430, 434, yeah, which coincides with it's slightly above the 200.
Yeah.
So now, interestingly, you might remember last year around March, April, 4,200 was a key resistance level for the markets. It was spoken about extensively on CNBC and on Bloomberg, and it was very frustrating if you're a directional trader because the market hung out there for about 4 weeks. So I really want to see what happens with this, and that's when the market was in a bullish posture. Whereas at the moment, yes, we've had a small bullish run, but overall we are still in a bearish trend.
Yeah, well, it's starting to change.
Yeah, it is starting to change, but if you look at the last 3 months, it's bearish, but we're having a turn.
Yeah, if we connect these highs here, we're kind of past right at the upper part of the trend. So it's getting to that point. And at this stage, I mean, I'm loving my broken wing butterflies, sideways butterflies, Iron Condors that we're going to talk about here tonight. And we're fine. We don't need a strong directional market bias in order to do well with these hedge fund strategies and the credit spreads. So yeah, that's where we're at. Let's take a quick look at gold and silver /GC is gold. What's gold doing? Gold setting new heights. Let me go ahead and go back to my my other futures here. Let's look at bonds, which is ZB. Where is it? There. So bonds have dropped a little bit today, but they're hanging out. Look at this upside down head and shoulders. Shoulder, head, shoulder. We've broken that shoulder here. We had a little bit of a run, so that could be the market bottom for bonds and them rising. We'll have to wait and see. And then the UUP, which is US dollar. Whew. Let's see, I haven't even seen it today. Oh, it dropped hard. Okay, the US dollar has come down.
Oh yeah.
I didn't notice that until just now. So that's where we are. Markets are doing what they're doing. Oh, let's pause for a sec. Gerardo, why don't we do this at the very end? Gerardo,
sure.
We've been dealing with the issue with the discussion boards from Kajabi, which is the engine that we're using to build the community and give you the links and all that good stuff. But it's got some problems with respect to sorting the posts, and they're not sorted by the latest to the most recent to the latest. So we're working on, or Gerardo's been working on, what is it that you want? And he has some questions to help guide us to provide a community resource that you really would value and use. And so he's got some questions at the end that we'll raise. Probably when I hop off, Gerardo, you could do the poll, and we can get it. We just like your feedback on what you'd like to see, and then that's what we'll build. Quite frankly, straightforward. Okay, so let's go back to portfolio, and these are the open trades. We've got a lot of them, and I'm starting to track some Iron Condors. We started with this Newmont trade on August the 1st. And then on the 5th, we threw up some. Matt, were these actually spoken about in live?
There were two that weren't, that I published in the sniper thread. And they were for, bear with me 30 seconds. They were for Apache and United Health. So they weren't spoken about on live. The one that we did do on live was Western Digital.
Okay, but you posted these in the thread. Is that correct?
Correct.
Okay,
yeah, Western Digital we did live, and the other two, yes, we posted in the thread.
Yeah, so I want to talk about, we did the Newmont mining one on August the 1st, and I did speak about this. We actually placed it live. Excuse me. So I want to talk about these, but first, let's look at the red on the screen here. And you notice the red on the screen, long-term bear call spread, long-term bear call spread, long-term bear call spread. This one on BP is a put spread, a bull put spread. But this is where the heat is in the portfolio. Everything else is doing well. Now these trades here, these Iron Condors just got put on. So I'm not expecting there to be a lot of profit in those right away. But this RUT trade here, we talked about this even yesterday on the hedge fund live talk, because it was really poignant. A lot of us are in the trade, and the way we talked about what to do with it. And for me, it's all about this 2000 mark, which is the short call, and we're going to batten down the hatches, contract, butterfly if that happens, keep our risk contained. So that's still the plan. And the data is not update yet on, let me just see if I get the latest. So I don't know if we have the latest RUT data here. Let's see. Probably won't get it till tomorrow, but let's look at the RUT and see what it did today. It was, you know, it's up like everything else. So the RUT is at 1969, right, approaching 2000. This pretty much straight up move from just July 14th to today, almost a month of straight up with very, you know, very anemic little corrections, but really pretty much just straight up on the RUT. So is it going to keep going? It might. I think 2000 is strong resistance. So is this 200-day average. So the batten down the hatches is in place. I'm not even worried about it. I'm going to let the cards fall where they may. I'm not going to panic. I'm not going to adjust too soon. I got my rules. I've tested them. I'm going to be battening down the hatches if the stock, well, for me right now, there's the 200-day average. So I might even wait for the S&P 500 to breach this 200-day moving average. Now, and if I wait till then versus 2000, then it's going to cost a bit of money, but I'm not worried about it because just yesterday we got filled on this one. And this is the hedge that I put in place. And if you were on the call yesterday, you remember that I went in and determined that the RUT and the XSP were very correlated. They're almost the same chart. And so now we're already starting to make money back on this hedge trade. We still have the Iron Condor, we still have the credit spread. And then we have this trade, which is already starting to make us some money back. Now it's not the RUT, but it's correlated with the RUT. It's moving with it. And if the RUT keeps on going, so will this, and this hedge will offset the loss that I might experience in the Russell 2000 bearish credit spread. All right. Now that might be a lot for some of you. It becomes a game of checkmating, of throwing on another trade. And then from here, you want to continue to adjust this trade just like you would any other broken wing butterfly. But this is working for you while the bear call spread is working against you. So it's a hedge. It offsets loss that you may incur in the Russell 2000. Even now, with the stock rising, we're losing some money temporarily. If the RUT stops moving up, time decay is going to suck these lines over here into profit. So I like the idea of putting these little hedges on to collect some profit. If the stock drops, we'll lose a bit of money. We'll lose some of our credit, but certainly it's going to help us in the event that the RUT starts losing even more money. So that's one of the ideas that I wanted to share with you and amplify again in case you weren't on yesterday's call. If you weren't, I would highly recommend that you check out the Fathom link and check it out, you know, and I walk you through the process of creating these broken wing butterfly hedges. So that's something I wanted to highlight. Now, this is your call. We want to hear from you, but I want to also emphasize, given the way that these Iron Condors are working, that we had this Newmont trade that we put on August the 1st. Let me pull this one up. This one's working fine, working great, actually. And so on August the 1st, what I did was I found a bear call spread on Newmont Mining. Now it's gold. And they said, you know, I've said this many times, I'll just refresh your memory. They came out here at earnings, said they're going to cut production, and that's not good for revenues. And there was a possibility the stock would keep on dropping, but the price of gold was rising. And so the rationale was, let's go ahead and take the call spread out of the scanner. And I lifted it up a little bit and then throw a put spread underneath. And so you're basically playing both sides of the fence, a credit spread up top, a credit spread down below. And the adjustments are exactly the same as broken wing butterflies. We have 2-point strikes up here. There's an extra strike between both, you know, short and long for each of the calls and puts. So you could always contract risk if the stock rises, contract the risk, and then perhaps even, you know, stocks up here, you've made money on your put spread, collect the profits and sell another put spread, maybe right at the same strike, maybe below, tighten it, do a few more. The possibilities are not endless, but there's a lot. So that's what I'm liking more and more, Matt. And you have some here if you want to maybe chat a little bit about one or two of them, Matt, and then we're going to get you.
Sure.
If you hold on, Matt, if you do want to share a trade, if you have any advice you're seeking around adjusting, or if you'd like to share a technique that you've uncovered, then that's the purpose of these calls. It's not about Matt and me yammering on. It's about giving coaching. So be ready with your trade, have it loaded in Tom's tools, and then when we come to you, you can go right to the trade.
Although we are happy to yammer.
Oh,
Can I just get you to bring up that screen again, Mike? I might talk to your screen as you've got them tracked there in that portfolio. Now, just quickly, I could talk to this, but it's your naming convention. Mike, Johnny's just asked if you could explain the naming convention that you use on these trades. And I suppose I'll preface Mike's answer by saying everyone's different and has a separate naming convention. It's what works for you. But Mike, did you want to talk to how you name your trades and why?
yeah, Iron Condor, long-term bear call spread, long-term bull put spread. That's it. It's just the initials of the strategy that's being employed.
But what I'm asking is why you choose this instead of something else. I mean, sometimes if you're trying to find a trade, you want to look for the alphabetical name or whatnot. So why do you do it like this?
I gotta say, I didn't quite make out what you said there. Was a lot of background noise, John? Could I don't know if you can even manage the
So
noise.
Mike, the question was rather than listing it alphabetically, why do you choose to name it like this? And I think the answer would be you're just naming by strategy first, so that way you can go straight to the strategy.
Yeah.
Would that be correct?
That's the reason, yeah.
Cool. Hopefully that helps, Johnny. So Mike, if you want to jump into let's say the WDC trade, Western Digital. Now, one of the things, no worries, Johnny. So on this trade here, I found this in the TTR call credit spread scanner, and I just modified the trade slightly to lift up the upper strikes. I also opened up the spread and then built the credit spread down beneath. And I wanted to do this, Mike, if you could turn on the standard deviations for me as well, down the bottom, which would be great.
Here?
Down, down, down. Yep. Oop, up a little bit. Yep. Thank you. And if we scroll back down, and then what I was looking at doing to try and minimize my risk is where can I get a good amount of premium, but stay outside of the standard deviations. Now, we can take you through what a standard deviation is, but fundamentally it's a calculation that looks at potential expected move of an option over the duration of its lifespan. So what I wanted to do was, how do I get the risk as far away from the stock as possible with probability on my side, with enough premium, therefore giving me a viable trade? And that's how I built this. So this was looking at WDC trading sideways. The trade management plan here would be the same, and I would treat either side of this Iron Condor as I would in any other credit spread. If we start getting a little bit close to the heat, up around the break even or the short strike potentially, I would look at contracting that spread. And what I would then look at doing, being an Iron Condor, is on the opposing spread is rolling it up or rolling it down. So by way of example here, let's assume WDC had a bull run and closed around, say 57.50, which is the short on the call side. I would look at contracting that spread up top. So I might make that, drop that 62.50 down to 60 to contract the risk. Or I could potentially also close that spread out. But at the moment, I'm just risk managing. So I could contract the risk there, and then I could look at rolling that 30.35 down the bottom up. And I'd look at putting that at a strong level of support down below. So just looking at this chart here, I might look at bringing that up to around a 40 or maybe 45.40, somewhere around that prior low that Mike's pointing to there. And then that way, what I'm doing is, whilst I've lost on the call spread side, I've contracted my risk, but by rolling the winning spread underneath up, I'm bringing in more credit to offset the loss up top. And that's how I'd look at managing this trade. So that's WDC. Any further comments,
I don't know
Mike?
if we need to go after all of them, though. I really want to. So it's the same story across the others, and that is the same. The whole contracting the losing spread without the Iron Condors is the same, and then we want to use the opposing spread that's went and made money and collect it and get some more, or sell for more credit. So that's basically the idea, as Matt pointed out, and. I think it's a really good approach, and you have great probability that you'll have to do nothing. So we've got 1, 2, 3, 4 of them going forward. When we get together again on Monday, we'll continue to do more of these in this market. I'm not feeling confident about bear call spreads right now. I'm not 100% confident about bull put spreads right now. It looks like inflation may be abating and starting to plateau, and maybe it'll start dropping, maybe 50 basis points instead of 75 next Fed meeting. All of that is possible. So that's the crazy climate we're in, and I think Iron Condors make a lot of sense right now.
Mike, can I just get you to open the Apache trade for me? I just want to explain something that some people on this call may or may not be aware of. Now, when I posted this trade in the sniper thread, I referred to it being either a ratioed Iron Condor, ratio Modidor, etc. I just want to explain what that actually means. So if you look at my spreads up top, I have a 45.50, so I've got 5 points up top and only 2.5 points underneath. So what I did was I sold twice the amount of spreads underneath to balance this out as an Iron Condor. Now, what this originally looked like, Mike, I'll just get you to change that bottom spread to a 1-1 for me. What this originally looked like is a Modidor. So a Modidor is a modified Iron Condor, and you'll find that it's unbalanced. You'll see that the risk profile changes. I don't have an equal weighting of risk. And that also is representative in max profit, which was only at 9%. So this is what it originally looked for, because I had 2.5 points down beneath and 5. So to balance it, I needed to add another 2.5 points on that side, and there were no strikes. That's why I couldn't go to a 5-point wide spread down below. So what I did was added another couple of eggs.
There was no 15 put, is what you're saying, right?
From memory, correct.
Yeah, because
so I just doubled that.
Yeah, exactly. So you don't have the ability to contract down here, but there wasn't a 15 put. So in order to, so one way I think about it, I call it strike risk. So you look at the number of points here, 5 between those two spreads, those two legs, 2.5 here. And so you can see this has 2.5 points of strike risk. This one 5. And so when you can just do the math then, well, I want 5 points of strike risk down here, so I've got to do 2. And then that's what will balance it out. So that's one distinction I use personally to figure out how to balance these things out. So 2 times 2.5 is the same. That's the distance between these two strikes, is the same as 1 times 5. So that's the way you can think about how to balance. When you have, you could, even if you wanted to put less risk up top, you could do more spreads than that. But that's how you balance in the event that you don't have all the strikes you need. Okay, good. Well, let's go ahead and open the floor. Some of you are pretty persistent about using the texting. That's fine, but this is community, and we would prefer that you raise your hand and go on camera, even if you get. I don't have bad hair days because I just shaved it off, but just get in here with us and chat and let's see. So John is saying, I found it informative how you sized your XSP broken wing risk profile with the RUT loss. If you have a chance on another broken wing insurance trade, we'd be good to go over that again. Yeah, we could go over that again if we don't have anybody that's interested in getting some coaching or sharing an idea?
Mike, we do. We have two very willing participants with their hand up. I'll just answer another question Johnny put in the thread before we move on, and it's around that Apache Iron Condor. He said, is there any Greek benefit to adding in that second contract? Yes, because we're adding another contract, you'll find that the Greeks change, all of them, in fact. So did you want to talk to that, Mike?
Yeah, I guess we could a little bit. I mean, basically the Greeks are additive. So if you only do, I mean, keep an eye on theta. That's one Greek you could look at. They're all going to change. If I take this down to 1, because you're selling less contracts down below, your theta will drop. Theta will drop from 139 to 95 cents. So yeah, all the Greeks, well, they're all additive. If you want to see the Greeks of each individual leg, you can see them here. So this theta number here is a summation of 1 times this theta, 1 times that theta. It's all additive in this particular case. So if you add these up, that will equal 0.95. So what you see in the dashboard is a summation of all of the Greeks, the delta, the gamma, the vega, all the same. So that's what they are. And so yeah, of course, if you sell 2 more of these down here to balance it out, then you're going to add more theta. You're going to reduce your delta. It all changes. So yeah, it does make a difference.
Thanks, Mike. And Johnny, to your follow-up question to that, it would depend on what the Greeks are if there were a 15 put. So yeah, thanks, Mike.
Exactly.
Mike, we're going to go to Sue. Sue's got a hand up.
One more point on that APA trade.
Oh, sorry, Andrew. Yep.
Because you had $500 risk up top, when you go to $500 risk down below, you get more income, and it doesn't change your margin risk at the brokerage.
Yeah.
Spot on.
Exactly.
Spot on. It's an awesome way to get better leverage and higher ROI.
Mm-hmm.
Fabulous.
Excellent.
Thank you for that call out, Andrew. That's a great share. Sue.
This is a combination of a question and a comment. I have on, in fact, I'll go to screen sharing while I talk here. Wait, let me see if I can do it. Yeah, it's a credit spread that's being threatened. And so I did the batten down the hatches thing. And I noticed the first batten down the hatch is to contract the side, where the risk was, which put the whole thing into negative, but less total risk. Well, I didn't like that. So then I went ahead and put on a butterfly. And let me get to screen sharing. And this is just a comment, because in the process of getting to the butterfly, it's really scary that suddenly you're all negative.
Mm-hmm.
Let's see.
Let me speak to what you just said.
Okay.
So, there are times in trading where it is no longer about making money. It's about reducing loss. And so that contraction there, yeah, you're not going to make money, and then you butterfly, then you give yourself a chance. But really, at the end of the day, when these credit spreads go wrong, it's mostly about losing less, not making money necessarily. I mean, you can, but so that might be helpful as a more realistic context.
Okay. Let's see. Let me see if I can. So let's see if I go to. Whoops, I went to my screen, but I didn't go screen share. Let's see here. First, I hit screen share.
Mm-hmm.
And then I need to figure out where to, then I'm not quite sure where to go to show you the screen that I'd like to show you.
Well, just share your desktop. That's the best way to handle it. It's much easier. So then hit the desktop icon, and then there's a share on the bottom right of the pop-up window.
Oh, here?
I can't see what you're looking at, so I'm not sure.
Oh.
But it's the bottom right. There's blue. You click green share. You click desktop on the pop-up, and then there's a bottom right. There's a share. There you go.
That's it? Oh, that's okay.
That's it.
That's not the one I meant to be sharing. Although I do have a question on that ultimately. because that's something that's going to need adjusting.
Uh-huh.
Let me get this out of the way here. Oh, okay. Okay, here's the original one, my original trade.
Mm-hmm.
And then I went to closing the, let's see. I tried to get these in order here. Here's the original trade.
Mm-hmm.
And then I battened down the hatches, which should be
Yeah, that's it. But it's not turned on. You're on August 10th, so you must have it turned off.
I did 2 on August 10th.
Mm-hmm. But we can't see. You have to turn that off so we can see the impact of the adjustment, because the adjustment is turned off. There you go. And then you hit the risk graph button now. There you go.
Yeah, this was adjustment 1.
Mm-hmm.
And then this was adjustment 2, which after I looked at the chart on this, what was happening, I decided that it's been just going above the top Bollinger Band, zipping up. This was the final adjustment.
Mm-hmm.
And I'm just thinking that intermediate trade was a bit, there was no way to make profit, but it certainly did reduce the risk.
Yeah, and how about this one? What's happened to your risk from the original trade?
Well, from the original, I think this is the original. It increased the risk.
Yeah, risk went from 360
significantly.
Yeah.
Here's the first, and then here's the last.
So you added another $200 of potential risk. And if you're right in the stock, so this is a good example of going for the profit and not focusing on risk management. So now, can we go back?
Here's the chart.
No. Hold on a minute.
Okay.
This might have reasons to believe the stock's going to go up, but it could certainly drop.
Yes,
So
it certainly could.
Now you're in a position where, we have another. I think we have another report coming tomorrow. I can't remember. It's another inflationary report comes out. It shows negativity, and then boom, you're now losing more on this trade than you would on the other. And so this is not something I would ever do, because I'm more focused on risk management. That's the job of this game we're playing. The job of trading is really risk management. If you're going to be one that's going to make money consistently, it's always first, and without any exceptions, the first rule in trading successfully is risk management. So you put yourself in a position with more risk. The stock has to go up. And I would much rather, and you didn't finish the batten down the hatches, the other part of that. So there's the contraction, and then there's the adding the butterfly underneath. Had you done that, your risk would be a lot less than it currently is, maybe 50% less risk.
Okay.
And then you drop it down to just a very small amount. And then from there, you can adjust the resulting butterfly. And then, like we did on the RUT trade yesterday that I showed you at the start of the call, is you throw on a broken wing butterfly to make some of that money back. So here's how I look at it. I put on these credit spreads. I know I can batten down the hatches, contract, butterfly, get my risk down. And then my job then becomes, now I know my risk is contained. I can breathe. And then what I'll do is make my money back if I can with broken wing butterflies, and then go find some better trades. That's kind of that's one approach. It's not the only approach, but at the core of that approach is risk management first.
So it happens that neither of these adjustments got made because the market closed while I was still fiddling around. So in actual truth, this is the trade that I have right now. So what you're saying is to contract the top side, which gave me, I'm not sure I can find the right risk graph anymore. Wrong one. Yeah. Which gave me this one.
So you can make a duplicate of this and now add the call spread underneath.
So you, hang on a minute, let me get this thing out of the way.
There we go.
And then, so you would, so underneath, you would add it's unclear to me. Let me go to edit.
Yeah, so so what you have left is you're still short. Let's look at the legs while I describe this. So if you can scroll up, there we go. So you still have 2 short 200 calls, and now you have 2 long 201 calls above. And so what you want to do now is sell 2 more 200 calls and then buy a 199 call. And that will complete the butterfly.
Let's see. Buy 2 200.
Sell. And then buy 2 199s. Let's get the expiration date correct too. And that's going to greatly reduce that'll reduce your risk a whole lot more than it already is. And now your risk is $200, 196. Oops, something's not. You got September 16th.
You know what I did? Yeah, I didn't. I understand what you mean, but I didn't take out. I need to delete.
No, you have the wrong expiration on you have August 19th. It should be on the last 2 legs.
Oh, that's right. I'm thinking of a different trade.
Yeah. There we go. So no, those are fine. Those are fine. Nope. Don't do it.
Oh, that's right. September.
Yeah. That's the original. That's okay. So that's the original. Now we want to, with the new legs, make them the same expiration. There you go. And that'll get you the real deal here. September 16th. Yep, looks like it.
Yeah, let me make sure that matches. Yeah.
And then that'll drop your risk quite a bit. Now it's only 100. Now your risk is $145. So you've decimated your risk. And now the gain and you also notice, so you can't lose much more than you already have. So that's benefit number 1. And the stock can go pretty much anywhere at this stage. And the red line is vertical. So your delta is close to 0. If you look at your delta, scroll up. Let's go scroll up and look at the delta. You'll see your delta is 0.02.
Yeah.
So now you don't have to worry about this stock can go pretty much anywhere. You've lost $139. You can only lose another 6. So that now, what was that? What does that feel like when you know that the worst case, you only lose another $6? You want to rest with that feeling. And when you actually experience that, and you instead of that other trade where if the IWM tanked, you'd get killed. You're going to be nervous about that. You're going to have some experience about that. You're going to be thinking about that. Now you don't have to worry about risk anymore. And now it becomes you're in a better position of power, let's call it. And now what you can do is just go make $145 back on a broken wing butterfly, or find another trade and make $145 somewhere else. That's the idea of batten down the hatches. You know those those anemones that are in the ocean?
Oh yeah.
As soon as a fish comes, they go whoop, and they go inside. It's kind of like that, you know. And then you just collapse the risk, contain as much as possible, and then the job becomes to make $145 back, or just eat it and go find a really good trade somewhere else.
Okay, thank you.
You're welcome. That's a really good example. Thank you for raising it, and it's good to repeat this stuff with a real example. This is what I would do, Sue, and then I would also do what I did yesterday, and I would look for a bullish broken wing butterfly on the IWM or bearish. I would put both on, in fact, if you can, and then just go make 145 bucks back somewhere.
Mm. Yeah, I think that a couple of sessions ago, I think it was John who said something about demonstrate, what is it? What did George say? Clusters of
Flocks.
flies.
A flock of flies.
Flock of flies. That was it.
Yeah, you can put butterflies on top of butterflies.
Yeah.
I put on a I'll talk about this one tomorrow, but I put on a regular butterfly on match, and then match proceeded, it tanked, and then it proceeded to gap back up. And I adjusted the butterfly a little bit, and then I put another broken wing butterfly on top that's going to make money back in the event the stock's going to rise. And I won't lose. If I lose money on it, it's not going to be much. And the way I'm doing it is I have a strategy, it happens to be a butterfly, and then I'm hedging my risk with a second trade or two more trades, and then you basically checkmate the stock, and you're going to be making money somewhere. And so that's the outcome.
So do the bodies overlap at all?
Maybe a little bit. Yeah, I mean, you can put them anywhere you want. I like broken wings. Let me show you a trade real quick here.
We've got a few more questions from the floor when you're done, Mike.
Yep, no problem. Let me find the trade here real quick. All right, here. So to answer your question about overlap, here's my balance fly, and here's my broken wing. These are actually filled, and I'll show you how they overlap. I just took these right out of the scanner. So the scanner, so on this one, this is what I've adjusted it to. Oh, thank God it dropped today. Yay. When last time I looked, match was up here. But so I took an original butterfly and then I adjusted. I'll talk about how I adjusted it tomorrow, and then I'm like, well, I can still lose money here. And so what I did was I just threw on this broken wing here. And so this broken wing here that's, it loses money here where this butterfly is making it back. And then if the stock rises, up here and I start losing, first off, my delta is pretty flat. I'm not going to lose much if the stock rises. And so I could readjust this one. But while I'm dealing with this risk, I'm making money on this one. And so the overlap is this part of the broken wing is overlapping this risk in the other trade. And so together, I've got, maybe I break even here and I make money here, but this was basically a losing trade, and with a few simple adjustments, I'm not going to lose money on this. And that's where you can get to. That's more of the hedge fund approach. You can use them in the Iron Condors have been battened down and turned into butterflies. But everybody here also is in the hedge fund course. And this is another echelon of trading. And the only way to get to it is, we'll keep talking about them here, but is to start practicing. And if you find an adjustment that you like and you could share it or say, does anybody have any ideas about how I can hedge this? Put them in a thread, and let's support each other. There's a lot of the knowledge that I have has been given by the amount of teaching I've done and the trading I've done for 25 years, but we have a lot of other people here that have worked equally as hard. All of you worked hard, you've been in coaching. So let's, it's an opportunity to really band together as a community. A mastermind, I think, Paul, you call it a mastermind. Napoleon Hill talked about masterminds. We have individual minds, but the collective mind that we could create together is vastly larger than any one of us, me included. So that's the idea of MW trade coaching, is that.
And I suppose another good point, Mike, which is actually a learning you gave me, is there's no absolute. When I started my journey a number of years ago, I was looking for what are the absolute rules that I can trade to make this work. And there is none. It all comes down to your prognosis, your three-part prognosis, then playing around with your trades and your strikes and looking at your Greeks and then getting an outcome. So to Mike's point, sharing as part of the community, you might put your problem out there. You might get 10 different ways of solving it. And one of those may suit you and the other 9 may not. But they provide great insight at a community level, and we all learn off each other.
Yeah, totally.
Okay, Mike, Mr. Smith in England has been waiting there patiently with his arm up. So David, over to you, mate. Oh, you're on mute, David. All good. And after David, Mike, Paul has his hand up as well in the Caribbean. Just watch out for that ceiling fan, Paul.
Let's go to Britain.
Yeah, so my question really is about, when you look at the Apache trade you had up recently, Matt and Mike, you were talking about the lowest strike at the present time. These are dynamic situations, and as time passes, what is the triggers for the market makers to add extra strikes? Is it just when the price drops, or are there other factors as well?
Yeah, they're going to be adding strikes where they think there's a market for them. You know what you'll see often when a stock tanks. Sometimes if it tanks enough, there's no strikes on the day of the tanking, and then within a day there's a whole bunch more. So it really comes down to business for them. You know, put strikes where they think they can get them. Imagine if we had strikes at every dollar. You know, the liquidity would dry up. So it has to do with liquidity and demand, and that's how they handle it. You know, when the stocks get into the multi-hundreds, 500, there's 5-point strikes or 10. There's sometimes 20. $5 stocks, there's 50-cent strikes. And so the granularity of the strikes is given by liquidity and demand and them making money. So yeah, on this one, and then time as we approach the expiration, strikes get added as well. So yeah, I would imagine on Apache as the example, I would imagine that, let's see, we've got October, these are October options. I can't even believe we're in August. That's not that far away. And for some reason it's not coming up. There we go. So right now there aren't any 15 strikes, but I would imagine as we get closer to October, most people trade current month at the money. And then as you go further out in time and strike, the options are less, what's the word, granular. So that's the best answer I can give you. It's and I would say as we approach October 21st, there very well likely will be a 15 put.
So I presume you have different market makers for different platforms. Will you find different platforms might have different strike prices in the future as time passes?
The strike prices are going to be the same cross-platform.
Right.
Yeah.
Thank you.
Yeah, you know, it's an interesting question, and at the end of the day, I trade what's there, trade what's been made available, but this is a good question. I mean,
it's kind of anticipating future trends as well when you do your trading. You're not just thinking static. You're thinking about I would say time.
Yeah, but I would say if you start seeing the stock, so your concern perhaps would be, if this stock starts dropping down towards 20, will there be a 15? Yeah, they'll put a 15 there once the stock gets close. Again, more strikes at the money. You'll see more granularity at the money. So if the stock starts dropping here, you're going to get more strikes to play with. I want to make sure I'm answering your question. I just want to make sure.
You're doing perfectly. Thank you.
Okay. You're welcome. I just want to make sure I address the concern that you might have. Is that it? Really?
Yeah, that's it. Simple question.
Okay. Yeah. Good.
Thanks, David. Fabulous. Mike, we're going to go from Britain over into somewhere slightly warmer. Over to you, Paul.
Oh, cheers. Thank you. If I can just follow up a little bit with where Sue was. Do you guys see that okay?
Yeah.
Or
Sure
on
can.
my view full screen. There we go. That helps. Except you're in the way. So you can see it. I can't. There we go. So I found this absolutely perfect, can't miss trade on the IWN on the scanners, just about exactly the way that Sue did on June 26th. And of course, entered it. Now, as I followed this along up to yesterday, I got a little concerned. And the discussion that we'd had, and we can see the where am I? I'm at two points away here, 96 and 94. I elected to not contract and butterfly, but I went this route. And the reason being, for me, was, as we say, we go delta neutral here, and I still don't know what this thing is going to do. So I bought myself a little time for it to go up, bought myself a little time to go down, and then I still have the opportunity to contract one side to make it a broken wing, or move the two short calls up or down. I don't know what that picture looks like, but I was messing around with the pictures, and I was hesitating about contracting the strikes first.
Got it. And this is really great, because I hadn't really thought much about position, but what you're doing here is, instead of like, one choice is to batten down, contract, get the risk as small as possible, which is what I've been teaching. What you've done here is you have delta neutralized, you've limited your risk, and you've given yourself more ability to adjust this trade by you can contract either wing. There's more adjustment opportunities in this trade than the way I've been teaching it, and I like it. And if this gives you more ability to lose less, essentially, because you can contract one wing or the other, just like you can.
Yeah, and obviously I did go down in risk from 855 down to 495 for a start. And I think once we have a clear direction, I'm not 100% sure that it would make it into profit, but I'm sure the risk would be lowered even further once it became a broken wing. And then additionally, put something else on. I haven't thought about putting anything else on yet. It's still over 30 days away, but just to follow up what Sue did, this was what I thought, not to contract.
I like. Cheers.
Okay.
Thank you.
Thanks for letting me say that.
Yeah,
Thanks,
really good
Paul.
stuff.
I'm glad the market closed before I could do anything.
I was on the other end of the spectrum, Sue. I was desperately trying to get a fill on another position, racing the market makers. I was like, don't ring the bell. Anyway, I digress. Thank you very much for that, Paul. That's fabulous. Mike, we're going to go to Hank now. I'm going to screen share for him because Bill Gates has put a bug in his computer and his screen sharing won't work. So I'll screen share and he will talk.
Okay.
Okay, over to you, Hank.
Yeah, at the end of the day, I was looking at this trade, and at the time, actually, when I did it, I just hit refresh and then updated the 7. I was around $500 for the debit to get into this trade on Tesla, because I see from what I have for technicals that I utilize that I would seek that it's going to be bouncing up towards that level. And I was just open for, I was thinking, what do people think of a trade, the trade like this, like everybody's saying, you don't have any absolutes. XLK as a sector is outperforming the SPY over the last couple of weeks. So in the hourly charts that I was looking at, it actually had very strong jump ahead. So we're starting to see in the overall sector some of those trades coming back. And I just immediately jumped to Tesla because they had been playing around. We talked about the multi-day VWAP, which Mike, if I look tired, I've been up late. I've been trying to come up with that trading plan to demonstrate to everybody how, I would use it. I'm back testing it right now to make sure that the validity of it.
Okay.
So, but this is just using those tools and looking at it. This would be something that doesn't come up in the scanner because I actually had to do the broken wing and I actually had to create it myself. And that was just, like I said, from looking from the charts. And I think, Matt, you alluded, you do the same sometimes. You just don't always take what's on the charts or we get from the scanners.
Yeah, I was just talking to Johnny about that in the chat thread.
So at the end of the day, you've come up with a directional prognosis with a system that you use, but your directional prognosis on this trade is obviously up, right? And not too much though. You think it's going to hang out in the body of the butterfly? That's where it'll end up. Is that the prognosis on direction?
Yes.
Okay. And then with this trade, you have the ability to make it multi-directional. So if the stock drops, then you could do a lot of things. You could take off the bullish spread underneath, turn it into what do you got up there? Calls a credit spread that could make money if the stock drops. If the stock, busts through the, out of the past the upper break even, certainly the inflection point where the lines cross above the upper break even, where the lines cross, that would be a place to consider adjusting as well. Take off the bear call spread and leave the bull call spread, and you should be able to generate some profit either way. So it's kind of like it's a holding pattern a little bit. And if the stock starts to misbehave and it goes, drops from here, or it doesn't go range bound, doesn't end up in the body, it starts making a strong move, you're in a good spot to adjust this trade. It's not something we typically teach with butterflies. There's a whole methodology around out of the money, standard balanced butterflies that George and Christina used to teach. It's another way. For me, I like the balanced ones when I have a solid sideways prognosis. And for me, that's companies like Snap that I've talked about before, Shopify, stocks that tank, they get decimated 15, 20, 30 or higher percent. And then the damage is done. The beatings have been completed, and then the stock just goes sideways. I like those. I like this butterfly trade on stocks that do that. And now I haven't played a lot with directional butterflies, which essentially this is. Balanced directional butterflies, I should say. Broken wings, yes, but yeah, I think it's good. It gives you a chance to adjust and probably be able to turn this into some profit.
Yeah, that's what I was thinking. And like you say, I saw something pop on the board. The numbers are interesting. It is a balanced butterfly, as indicated, even though the numbers are skewed, but it does put me in the position to make adjustments depending on the wild ride that Tesla would normally give. So.
Yeah, and you have 9 days.
Yep.
So right now theta is flat because the stock's at the inflection point. So theta's currently, well, it's 9, which is compared to $700 of risk isn't that big. But if the stock rises, theta is going to go big positive, more positive. But if the stock starts dropping a little bit, your theta is going to start eating your lunch.
Yep.
So you got to be ready. Once it drops below that inflection point where the stock currently is, then your theta is going to start working against you with enthusiasm.
Yes.
It's going to start really tearing the trade up. So you got to be ready for that. So this is like a gun, fast paced, fastball trade, fast moving, lots of adjusting. I tell you, broken wing butterflies for me, I don't lose on them. I lose on balance. Everybody has a scanner for broken wings. We put on 3 yesterday. They all filled and they're doing great. I like those. So I hate to do this, everybody, but I'm going to leave this in the capable hands of Matt. And then Gerardo's got a quick poll. It won't take but a couple minutes. But this is an opportunity right when we finish, Matt, if we could just give Gerardo some time.
Yeah, sure.
Yeah, thank you, man. We'd love to hear what you'd like to see in terms of supporting the community. We have WhatsApp, we have discussion boards, which don't work as well as we like. And we're looking at other ideas, but we want to get your feedback so we can build what you want.
Fabulous.
So,
Thanks very much,
right.
Mike. Really appreciate it.
Thanks, everybody. I'll see some of you in a couple hours.
See
Bet
you
you
later.
will.
Thank you.
Bye, guys. Thank you.
See you, mate.
See you guys.
Okay, Mr. Smith, back to England. Oh, you're on mute again, mate. There we go.
A question for Hank on the construction of his balanced butterfly that he just showed us on Tesla. I was just trying to understand why with your short leg you had 3. It was a skewed one.
Share it. Sorry, Hank, you go, mate. I'm just going to share the screen again.
Yeah,
There you go.
that's why I kind of brought it up there towards the end with Mike. That is a balanced butterfly because you have the combination of 3 and 3. So your center cell leg has to equal. You can do that on it instead of going 4. You would look.
I'm with you, yeah.
2. So what you have to do is to balance that, and what that whole trade there is, like Mike was saying, I wasn't really playing the Greeks, I was playing price, and it is a wild ride, and you'd have to be quick to adjust. If it breaks below the point, it indicates now that inflection point where all the lines are, because you can start losing the money quickly. But max risk is 700. So I believe prognosis wise that it will jump up and it will end up in the mouth of the butterfly the way it is there. And if not, I can make those adjustments by selling one leg or the other, depending on whether it goes up or down, and still have the ability to make some money. What I'm going to do with this one, because I didn't get in at the time, like I said, it was 500 when I first ran it. And that appealed to me. I was just going to snap it, but then I got distracted. And like you said, it was towards the end of the day, I didn't get it in, but I will do this on paper. And then what I'll do is I'll play it out depending on what it does. But you really have to be versed in risk management in order to play something like this. I just wanted to put it into the community because I would suspect that, like Mike said, all our knowledge being put together in the sessions that we're all sharing, that we should be able to do something like this if you feel that you're able to do it, and have a plan ahead before it's placed. So what I'm going to do is, like I said, I'll put this down and I'll start documenting. I'm back testing, as indicated before, on some of the way I use a chart, and I set up the plans because I don't always use the scanners. I go on, it's basically relative strength and momentum is what I'm looking for. So I'm trying to ride the tide, and it's done well for me. I definitely win more than I lose, but the risk management's always been the key to making money. And sometimes because I'm not doing it full time, I get burned, and obviously then you got to make up ground. But I think the biggest point we should pull away from all these sessions is definitely the risk management portion of it, how to mitigate it if we are going to lose. And overall, if we continue to stick to the process, not look at the total outcome and just focus on process again, that we're going to come out ahead.
Thanks, Hank. Appreciate it. Dave, does that help?
Yeah, it does. Thank you.
Splendid.
Matt,
Okay.
I did write down one thing. I thought, because sometimes I get locked up because I think I know more than I know. And our job is not to call bullshit on the market. How we've been going back and forth, and we're all like, it doesn't make any sense. It's irrational. What is it doing? And I've been caught up in too, and thinking to myself, why the hell is it doing this? But then, I've put out other quotes and everything else. I'm always saying, let the game come to you. And it's true. What we have to do is, again, that's process driven. You got to focus on the trade and what it's giving you, not what you think it's giving you. And I got to disconnect the brain at times. I have a tendency to overthink. And what I want to do is get into the point where I have recognition. I'm looking at symmetry and I'm looking at charts. It's like UNH. I was looking at United Healthcare. To me, that had symmetry. If you look at the chart and the daily, and you look at the peaks and valleys, the length of the peaks and valleys were very similar. And now we're looking at it on approaching a double top. And I'm thinking to myself, okay, is this ready to break down like it did before, or will it go up? And then, you know, I got it on the screen. I'm playing with it. It was like a couple the other day when we were looking at United Airlines. Like I said, if I had pulled that, that was a money winner, right? Instead, I was trying to overanalyze the chart. So what I'm going to start doing, like Mike said, I had the channel. I knew when it hit that inflection point on the channel indicator, I should just pull the trigger, go. It is what it is, and go for the ride. And if I did that, I'd be far ahead more than I am now. Because before I got into options, I used to pick stocks based on that momentum and relative strength, and I did well. I didn't make money quickly. I mean, you know, it is greed sets in. So, you know, I'd make the 15, 20%. I like making the 100, 200. And if I'm going to put the energy in, that's why options in the leverage, it's my game. I feel that's
exactly what I was thinking was the leverage. But if you did all right on stock, leveraging options.
Yeah. And so what I'm trying to do is bring that into play into the option side. So like I said, this community has caused me to go back and reflect on what I did before. I'm definitely taking better notes now. A couple of the forum, I posted a trade like on that FedEx where even though I had lost in it, I still continued to play it even when I was out of it, just to see if I could have done better or there was something that I missed. And like I said, it just makes us better as we're bringing any question or anything. So I'm done talking, carrying you guys over.
No, and then look, thank you for sharing, and thank you for being vulnerable to share, because like exactly what you're saying, and we've spoken about it a number of times, it's all about the rules. I have let emotion get in the way of my trading. I have overanalyzed. I have defined a system and then thrown another indicator in or another piece of news, and that has conflicted my thought process, and I've either missed out or I've blown the trade up. So, you know, it's all about defining the rules of the system, sticking to the rules, and doing your best to control the emotion. I'll share one next week. I will share with the community what one of my system backtest rule sets are, and I document these things. I define a set of criteria for success. I define a set of criteria on the market, et cetera, et cetera. And the reason I want to share it is because it keeps me centered on how I trade the system. Whenever I think, oh, but do I do this? I open my rule set and I go, no. If that rule set's going to change, I go back through Mike's methodology that he ingrained in me around doing the 150 live. And that's what I stick to. And yes, it's a lot of work, but it's what defines you as a trader, and that's your commitment to success, is going through and doing that homework. I find it vitally important. So I completely agree with what you're saying. Wonderful. Thank you, everybody. It's been a fabulous session. We're not done yet. Gerardo has been working in the background to look at ways that we can improve our community experience for you all, because it's about you. It's about garnishing you know, the most that you can from this program and microwave trade coaching. So Gerardo, did you want to take over from here? I'll stay on.
Matt, thank you very much. As you and Michael say, we really appreciate everybody here sending us the comments, and in this case, we figured out the community wasn't working as good as we were thinking, and it was thanks to a few of them to send us some comments and all that. So the idea, we had been checking for options in order to provide you with the best option possible, but we want to make it simple and keep it as easy as possible for you all. So that's why we are having all these questions for today, in order to just make sure we are getting what you really want and you really need. So most of you already know Slido. It's super simple. You can access with your phone or from your computer. Just go to slido.com and use this number, or take your phone and read the QR code.
So Gerardo, this is something you'd like us to do now?
Sorry?
You want us to do this now for the poll?
Yeah, I'm just giving you time, and
okay.
And we will start. So you will see the question right there in your screen, and you just need to reply there. The first one is, how useful is the MW trade coaching community for you? And please don't be afraid and be share. Just, we want to make sure we're having the most accurate opinion from all of you. If you think it's not important at all, don't worry.
Maybe
just let us know.
Being live.
Right, it looks like most of the people consider it important, so that's good. All right, Ron. Most of you think it's important, so that's the beginning of all this. That's why we are working for you. Now, have you ever been an active member of other online communities in the past? Right, it's pretty tight, this one. 57% of you did, rest done. Okay, wonderful. Now, which of the following social networks do you usually use? Facebook, Instagram, YouTube, LinkedIn, Telegram, Twitter, another one. You can select several of them here.
Really shows
Yeah.
Really shows market domination in this space, doesn't it?
Well, that's great. That means it's great we have the YouTube recording too. I guess that's really helpful for most of you. Okay. Now, do you prefer to see your social networks on your phone, your desktop, or both? Right, multi-channel. Everybody here is multi-channel. Wonderful, wonderful. I'm a little impressed about this one. All right. Now, what do you value most about the MW Trade Coaching Community Forum? Trade help, trade recommendations from the forum, adjustment tips, meet the other members and interact with them, learn to manage the psychology of trading with real money, learn from the mistakes of others. You can choose several here too, so pick as many as you want. All right, most of you.
Wow.
Right. Wow, that's great. Perfect. Now, have you ever been part of a private Facebook group in the past? From others? Right. This one is pretty tight too. Now in this one, it's open. You can text whatever you want and whatever you think. What do you dislike about private groups and communities the most? You can write anything you think. Could be, people sending 100 messages. I hate Facebook. That's a pretty clear one. Apparently the only one. All right. Okay. Yeah, this one is really important for us because it's the way we know the things and you really don't like. So keep going with everything you think it's helpful for us. All right. Well, apparently most of you don't like Facebook, and yeah, the privacy situation is one of the things we have been taking care the most, and it's probably one of the most important things we are considering. So that's part of what we are looking for. And well, we really appreciate all your answers here. We will check all of them again to make a decision about where are we going with the community. The plan is solve it as soon as possible, but we don't want to rush and just get a temporary solution. We are working on something to last. So we really appreciate all of you and all your answers. And Matt, I'm back to you.
Thanks very much, Gerardo. And look, thank you for those that participated in that, because it really does help shape the community into a platform that you want and that you trust. And I know that Gerardo and Mike will do and do everything possible to ensure that we meet your requirements and your preferences. So look, another fabulous week, another fabulous session. Thank you to those that have participated. Catherine, just wondering if you are doing anything to the RUTs this year, especially close today. No, I'm not. We're still short 2,000 long 2020. So I will just hold on that myself for now. Online forum and WhatsApp, why another? So Emmanuel, the challenge and what sparked this conversation was that the forum in its current state at the moment is struggling to list each one of the subjects in date order, and the content's not really structured in a way that's user-friendly is probably the best way to do it. So in the interest of making sure that it is more palatable, just trying to get some feedback from the community to put a forum in place that gives you guys and girls what you would like.
Yeah,
so
Matt,
look,
can I take the call just for 1 second to add something there? The main thing with the forum we have right now, we have been working with Kajabi to try to solve those situations you just mentioned, and apparently for them it's not exactly one of their strong points right now. Kajabi is a platform most of the clients use for just the course part, so that's why we are looking for options and answering Emmanuel too. That's the reason we are checking new ways to solve the community problem, because we would like to just keep the one we have, but unfortunately, as you mentioned, it's not working and it won't work for a while. So
just get something that's a little more fit for purpose. It's probably the best.
Correct.
And yes, Sue, it is our intention to talk about the shorter term credit spreads. That's actually something I've spoken to Mike about, and something that we will start dropping into these weekly things. And keep your ears tuned. There may be a focused course coming up on that in the next couple of months that somebody like me might be running. Anyway, so we'll wait and see where that goes. But everybody, thank you for a fabulous week. Keep your eyes peeled on the boards. Stay vigilant out there. The markets are still uncertain. We are starting to get, well, we are in a short-term bullish run, but nevertheless, there are still some downward pressures. Be safe. Have a great week. I'll see you guys all next week and on the boards. Take care, everybody.
Thank you.
Thanks. Thank you. Bye.
You see